Hey guys, what's up and welcome to a new Tesla update video. So as usual today, let's go over the market and see what happened. Pretty brutal day, I think, mainly because tomorrow is going to be a GDP print. Sorry, I'm like lost my train of thought there. And yeah, it's people, I think people are kind of, hedging against it and whatnot, and the market's kind of scared about it, et cetera, et cetera. So we'll go over exactly what happened, why it happened, what I have done, my current moves and trades, all that stuff, and what we can expect closing out the week. But other than that, let's just jump right into it. If you enjoyed, don't forget to hit that like button. But this is a prime example as to why I've been saying for the past like days and days and days not to be greedy, not to be stupid, not to be overly greedy about making stupid plays, because this is exactly why. Because sometimes you can have days like this where it just things fall pretty aggressively, which is why yeah, I've always been saying that be very cautious in this market always. And I always said that regardless of what happens on this run up, ultimately I'm still net bearish. It's just potentially a short-term bearish, a bullish rather bounce potentially up here. But like I said, I've always been net bearish regardless of what happens here, and I've always said that. But with that being said, I don't think it's over just yet. I still think there is still a little bit of hope left in order for us to get a push up. So Tesla ending the day at pretty much $698, which is a 5% drop, which is a pretty heavy drop. You can see here. Pretty much minimal buying pressure today at all. Like it was just straight bleed out the whole day pretty much, which is not the thing you want to see really. It's kind of like this, just the opposite now, which just kind of shows you just how volatile this market can be, right? We have a day where it's just pure buying pressure. We have a day 2 days later literally where it's just essentially pure selling pressure. That's just the kind of market that we're in. So let's go over what happened and what we can expect. So ultimately Tesla was setting up a potential bull flag, right? We were kind of setting up this little bull flag over here. You can see we touched point 1, 2, 3, 4. This should have been a nice little bounce, which we did kind of once right here. This was like the perfect bounce, like huge, beautiful bounce. But this is just the kind of market that we're in, where sometimes, even if you get these beautiful candles like this on the 15-minute, sometimes it's just not enough, and it did follow up, and came all the way back up to the 730 level, which now became resistance, ultimately support. You can see here several bounces, now it became resistance. And unfortunately, it was too big of a resistance. And not only did we drop below that, but we also, once we fell out of this little bull flag that we were setting up, you can see how big of a candle this is. And then it pretty much just followed up with just straight selling pressure for the rest of the day. One thing to keep in mind, and this is why I show you guys these charts, and I show you guys, what I personally have drawn more or less on them, and the levels I'm looking at, etc., is so that you can do it yourself and you can add it to your own charts, assuming you're, I'm assuming if you're watching this video, you have your own charts and everything, right? You should. It'd be kind of, stupid if you don't, but nonetheless, the idea is that you guys hopefully can, draw this as well yourself, and you can also follow yourself, because I can't be giving you guys updates every single, hour or whatever, right? And, the most important thing is, of course, for the VIX, right? We had the breakout, the beautiful breakout. We had the retest, followed up again once again over here with this green. But then as we kind of started following, as the market started getting some retaliation to the upside, which is good, the VIX started falling. But you can see here, it had 2 bounces off of this trend line that it broke out of already. And the second time, it was an actual strong bounce. And we can see now it has this beautiful confirmation of this breakout, which is now, of course, support, all-time resistance. And that's part of the reason why also the market now is, you can see, falling, right? So one thing I was also looking at on the SPY that, show me signs that potentially this might not be so good, is the SPY was also kind of setting up a little bit of a bull kind of flag or pennant, whatever you want to call it. And this is another example of just how brutal this market can be. So we had an absolutely gorgeous breakout in the morning, like beautiful breakout, seemed extremely bullish, but apparently it was just an absolutely massive bull trap, like an absolutely crazy bull trap, like just this beautiful upswing in the morning, and then just this enormous selling pressure just followed up for pretty much the rest of the day, which is insane to me, right? Absolutely giga bull trap, essentially, in my honest opinion. But sometimes that is what it is. And this is why I always say, don't be greedy, don't be stupid, don't do, over greedy plays, proceed with caution, because this is a market that can flip extremely quickly. And this is, I think, a perfect example as to why that is. So all that being said and done though, why am I saying that this is not potentially the end? That's it. Oh, it's all over. That's it. We're falling back down to 600, probably going to 400 next, which ultimately I think we will, but not just yet. And the reason is quite simple. So there are a few moving averages that we have broken below. Let me remove this little bull flag that we were in. There have been a few moving averages that we have broken below that, you don't really want to break below, but we have. But, like I said, there's always a 3-day rule. We kept above it, which is great, but now we want to see if we can maintain below it. Number one, for instance, the 21 EMA is sitting at 712, right? Let's see. I wouldn't be surprised if tomorrow, potentially, we get a retest of this kind of 712-ish area of the EMA. And we'll see if we can break above it. The RSI still ultimately actually looks like it still has a little bit of movement to run to the upside. Like, I wouldn't call it out entirely just yet, though I'm not gonna lie, it's looking bleaker. That's number one, right? So we did break below that, which isn't ideal. The Bollinger Band, we're now, around the white line, unfortunately below it as well. So I wouldn't be surprised to see a retest of that as well, potentially tomorrow. The 5-day moving average, we are below that as well, which isn't ideal. However, the one upside, the potential that we have here is the fact that we're still above the 10-day moving average, which is still something that's pretty important to keep above. Like I said, it is ultimately looking a little bit bleaker. It's not looking as fruitful as it did before, prior to today, I guess, essentially. But, we're still above the 10-day moving average, which is something to keep in mind, of course. That is a decent one. And the RSI, in my opinion, is still not looking that bad. It is pointing straight down, but you can see it is ultimately making a higher high and potentially going to be setting up a lower or a higher low here, right? Which is why I personally don't think that running up to potentially 800 or the top of this bull flag or bear flag kind of channel that we're in, I wouldn't call it, out of the equation just yet, right? It's definitely not looking as good as it did, but like I said, there's still definitely a chance. The only issue is the fact that this would mean that the VIX would have to drop one more time and probably do another retest of this kind of breakout. The VIX has been pretty much, and I've said this before in previous videos if you follow them, daily. I've always said that the VIX has been the only thing keeping me less bullish than I would love to be. And the reason is because the VIX dropped way too hard for how far the market has run up so far, and especially before as well when we were on this candle right here. So in order for the market to, like, for instance, a SPY to go to, like, let's say 400, right, all the way up here to, like, fill this gap, which is still technically possible in my opinion. It's again looking less likely, but not impossible. Same with the QQQ up to like 300. In order for that to happen, the VIX would have to drop, right? But the VIX would have to drop from here a decent amount. Like, even if it goes from here back to, let's say, in a couple of days to retest it, it's an 8% drop. That's not too crazy for the VIX, in all honesty. So I don't know if that gives. The point is, I guess I'm trying to say is, I don't know if the VIX, with the way it's looking, because the VIX is looking bullish, which is bearish for the market, with the way the VIX is looking and how bullish it's looking and how it looks like it kind of wants to run. I don't know if it gives us enough leeway or enough room to allow the market to run up to that target of 400 SPY, 300 QQQ, or even 800 Tesla. That's the only thing, in my opinion, that's been holding me back from being truly bullish, and why I've also been proceeding with caution. And I've said this before, the reason I've been proceeding with caution is because the VIX just suggests that there isn't enough room or like air left in the market to run up that high. It's still possible, but that's the thing that's been holding me back a little bit and making me overly cautious, which, I mean, thankfully, rightfully so. So ultimately, again, I personally would want to see Tesla hold about that 695 level, ultimately set a higher low over here, and then we could potentially have one more rally up to the upside. That's what I would personally want to see, right? Because, ultimately it would say that we're still kind of in this little mini short-term uptrend, as long as we don't fall below 685. If we fall below 685, then in my opinion, this uptrend is very likely broken. Because not only are we setting a lower low here from this little down that we had up down here, which, ended up following up with a beautiful higher high, which is great, but we're also going to be below the 5-day moving average or the 10-day moving average, and then ultimately that would mean that we're below pretty much every meaningful moving average for the short-term rally that matters, which would ultimately be quite bearish. So in case, you're wondering, like, okay, what do we not want to see break in order for this really just completely fall apart? Again, roughly that 685-ish level, you don't want it to break. You want that to hold, and especially 680. You don't want those levels to break. And yeah, that's pretty much the easiest way to put it. And ideally, what we want to see in order to have this uptrend still potentially a thing and not completely fall apart is also we want to, at the very least, have that 5-day moving average over here. Oops, so not the 5-day, the 10-day average, which is down here sitting around 695 roughly. We want to see that hold as much as possible. That is essentially what I'm currently looking at and why I think it's not over yet, though again, it's looking bleaker. The final thing I will say is the fact that the market is setting up a potential, overall, a bearish divergence, but on a very short time frame, a bullish divergence. Let me explain. So ultimately, you can see here, as the market fell down here, right? So we ran up. You can see we made a lower low on the RSI, even though we ran up higher here, right? You can see the RSI here is only at 67, even though we went up higher than this level here, which the RSI was higher. Then we ran up even higher, and the RSI is still setting lower lows compared to all the way up here. And then we ran up almost to the same level, and that's still setting essentially a lower low for the most part, right? And then we ran all the way down to this level here, which is now around that 700-ish, which is higher than the 685-ish level here that we double bottomed on, right? But the RSI, you can see, set a low of around 30 And then even though this did not drop below this, the RSI did. So that right there is a bearish divergence now setting up, which isn't good. I'm not gonna lie, for the longer time frame, it's not good. So essentially, I would say if there's any room left for a rally to happen, it needs to be pretty much this week. After that, I think it's going to become more and more bearish, in my opinion. So I would say there's still room for a potential run this week. However, not financial advice, of course. Make your own decisions. It's looking bleaker and bleaker and bleaker. However, like I said, and the reason this constitutes what I just kind of, or the reason I can back that up is the fact that on the very small time frame you can see here on this little area, even though the RSI pretty much bottomed out at roughly 23.3 roughly, which was over here when we pretty much were testing around the 700, we still fell lower than that. But as we started falling even lower, not too much lower, but nonetheless still, you know, slightly lower and getting weaker and weaker, the RSI started going higher and higher. So that right there is a very mini bullish divergence setting up, which essentially all that tells me is that we're probably going to run up potentially up to 720. Honestly, I wouldn't be surprised to see 720, maybe for lucky 730 again. I wouldn't be surprised to see a run up to one of those levels potentially this week one more time, but ultimately most likely get rejected, and then probably continue playing out this ultimate bearish divergence that we are ultimately setting up, which I think is going to be pretty much the main thing to look for at the very moment. So yeah, that's kind of what I'm seeing in the very moment. So I still think there's potentially a little bit of room left to get a little bit of a run up to about 620 to 630. I wouldn't be surprised by that. But in order for us to have a potential run up to actually, like, you know, that 800 or like the 780 to 800 level, we're going to need to ultimately break above this 750 level and hold. That is pretty much what you want to see. And again, the chances of that happening are definitely looking a lot less likely. But yeah, that's essentially what I'm seeing, guys. Let me know what you're thinking down below. In case you're wondering what I have done, I did say how yesterday I did sell those 700 puts. Thankfully, again, this is why I said I'm, you know, I'm trading with caution, if you will. I'm not, you know, I'm not getting greedy. What I did was, thankfully, in the morning when we had the initial run up, we ran up and then pretty much right around, I think it was around here, somewhere around this like 730s rough level, right? Unfortunately, I didn't do it all the way up here because I thought maybe we can go higher. But once I started seeing some weakness and potentially like an overall top forming here, which you can see we consistently kept bouncing off this area around the 750 level, which I should probably get a line on there, honestly, because that level has been showing some decent resistance. So I'll put it somewhere around here. But nonetheless, once I saw this get resisted again, and I saw this fall of just like, you know, just straight falling with like very little buying pressure happening, what I did was I actually bought back those 700 puts I sold. Except for one. And thankfully I did. Obviously I bought them back in profit, except for one of them. And then I left that last one as kind of a runner, just in case, you know, there was still definitely a chance to run up and continue this trend upwards. But then once I saw this breakdown below, you know, I still kept it just because I thought there still might be a chance, considering I took the most of the profits in, which is great. But, you know, I held it just in case, you know, you never know. And then once I saw that there's, you know, once we started breaking 700, I started getting a little bit unhappy. So what I did was I actually bought it back at a loss, but then resold it for the same week for this Friday, of course. And I sold a 680. So essentially that 700 that I bought back at a loss, I sold for a 680, which netted me overall in positive. Unfortunately, not as much of a positive as I would want for that specific play, but nonetheless, it's still positive, which is good. And what I did also was the ones that I bought back up here, once we dropped down to around, I think it was around here, somewhere around this level of like 706-ish, it was somewhere around here, is when I sold 660 puts. For this week as well. Again, pretty safe, right? Like essentially we'd have to fall all the way down here just for me to even potentially consider having to buy shares for those puts I sold. But it would have to drop even lower for me to essentially go under break even or be like under the water essentially. So that's essentially what I did right now. That's my current plays. Again, I'm playing very safe. I'm not getting, you know, too greedy, not too, you know, too risky or anything like that. I'm playing, you know, what I would consider to be fairly safe. And I'm not like letting things run too far or like getting too greedy when I see green and thinking like, oh, this is it, this is the moon, you know, whatever. Like I'll take profits. I'd rather take profits that are less profits than potentially holding for too long, getting too greedy, and then those profits turning into essentially being under the water and actually not in profit anymore and down in the gutter, right? So ultimately that's what I'm trying to avoid. And so far, you know, good thing I did. But nonetheless, that's what I'm doing right now. Let me know what you guys think down below. But thank you all so much for watching, and I'll see you tomorrow. Peace.